One of the issues with what happened yesterday is that I don't think there's a huge amount of clarity. There are various reports that the problem was caused by a memory and motherboard failure. And as you mentioned, there was a failure to switch to redundant systems. So this is a bit of a concern because there was also an outage about 2 years ago when there was an excess in the number of orders from Merrill Lynch, and that disrupted trading in October 2018. So at that time, it was a similar issue in that there was a failure to switch to the backup systems. And this does seem to be a different type of problem, but the fact that whatever backups they have don't seem to be working when there is an issue, that points to something that the Tokyo Stock Exchange really needs to address, especially if they want to retain credibility as a serious contender to be a growing financial center within Asia.
So would you say that there's a large risk that something like this could happen again?
It's very difficult to say, but one thing which investors will probably be concerned about is that after the 2018 issue, there was actually an upgrade of the Arrowhead system by Fujitsu, and there was a big announcement in November 2019. And both the TSC and Fujitsu were touting both increased throughput and faster speeds, as well as a significant increase in reliability. So obviously, coming within a year of that announcement, the optics of this most recent issue are not pleasant, and we think the onus is on the TSE to explain exactly what happened and reassure investors that they actually have corrected whatever issues actually caused both of the problems in the last 2 years.
What does it mean for someone like you that invests on the Tokyo Stock Exchange? How troubling is it from an investment point of view?
We don't think it's enormous, but at the same time, we don't want to understate it too much either. Obviously, while the eventual impact might not be all that significant in terms of the recent problem, at times of heightened market volatility, we think being unable to trade for a day, in particular if it's unexpected, that's not something that most institutional investors are going to easily tolerate. So if Japan wants to maintain its position where you have other exchanges, especially Singapore and Hong Kong, coming up, it really does need to address this.
Right. With that in mind, would it encourage you to then perhaps invest in other North Asian markets like South Korea? I know you just mentioned Hong Kong and Singapore as well, but what about some of the other North Asian bourses?
Yeah, we think, the performance in South Korea more recently has been relatively strong. And I think there have been certain instances of corporates relocating out of Hong Kong which have actually chosen South Korea rather than Japan. So against the backdrop of Japan's desire to become or to increase its standing as a financial center within North Asia, problems like this definitely will not help, and it's an opportunity for South Korea to capitalize.